morning everyone. So today we're going to start off with looking at investments and in particular looking at securities. So one needs to start and ask, well, what is the definition of an investment? It is either a financial asset or a physical asset that is bought, but the idea is that it will increase in value or generate income in the future. So let's just recap. It is a financial asset or a physical asset that is bought with the idea that it will increase in value and or generate an income. So when we are looking at investments, there are 9 different things that one needs to think of when evaluating or deciding on the type of investment that you are going to invest in. The first one is what we call a return on investment, or ROI. The ROI refers to the income made from an investment. How much interest am I getting? Am I going to be paid out dividends, or is my capital going to increase? And there's a direct link between the risk and the reward. If your risk is high, your reward is normally high too. The second factor that one needs to consider when making investment decisions is the risk factor. Shares have a low to medium risk over a long investment period, but shares can have a higher risk if there's a greater potential for higher returns. Share prices are volatile and unstable and unpredictable and may increase or decrease sharply. We've just seen that happen with Sasol. So remember, risk refers to the possibility of losing your money. The third one is liquidity. I like to think of liquidity as water. How easily or quickly can your investment be converted to cash? How quickly can it flow into cash? This is an important factor to consider because you might need to get your money quickly. And if your investment is tied up over a 5-year period and you need it now, liquidity needs to be quite high when you are thinking about your investment. The next one is the investment period. This is the period or duration of the investment. It can be short or medium or long term. But remember, the longer term investments normally have a higher and a better return. The fifth factor is taxation. One needs to look at what are the implications of income tax. Okay, how much are you going to have to pay with the profit that you have made? The next one is the inflation rate. In 2017, the inflation rate was at 5.4%. In 2020, we're looking at a possible 3.5%, especially with the coronavirus. So understand that inflation is a continuous increase in prices of goods, resulting in a decrease in buying power of money. So 100 Rand today cannot buy the same amount of goods in a year's time. And if you go onto that website listed there, it's quite fun to see when you were born to today how much 100 Rand is worth. Inflation rate is a percentage at which the prices of goods and services increase over a period of a year. Right, so when the inflation rate is higher than the interest rate on an investment, then the account or the savings account does not really yield a good return. One also needs to look at planning. Are you researching? Have you looked at all the opportunities? Have you tried to diversify your investments and spread the risk? Now we go on to personal budgets. How much money do you have available to put into an investment? So this is really tailor-made for everyone. An older person who is retired may be very nervous about where they're going to be investing all their money because they don't have years left to work to generate more income. Whereas a youngster, aged 20, 21, might be able to be a little bit more risky with their money and their budgets because they do have many more working years ahead of them. And the last one we're going to look at is the volatility or fluctuation on investment markets. This means looking at global economic trends. What is happening? Why are the share prices going up or down so quickly? And just being aware of these before you actually make your investment. So to recap, there are 9 different factors that should be considered when making an investment. It is your ROI, the risk, the investment term or period, the inflation rate, your personal budget, liquidity, tax implications, your planning, fluctuations or volatility on investment markets. And I hope that that has helped you. Have a great day.